The collapse is continuing. What collapse are we talking about? Well, that would be the dollar collapse that we've been looking at for the past, well, been really going on for quite some time now. But I want to continue this thread of analysis, especially in the last couple months here, as it does start to get a little more interesting as it does hit this first major target at about 103 for Dixie, and what essentially that means for the rest of the markets. Maybe even look at some other things as well. In fact, we'll even open up some other things that I do think are rather interesting. Anyways, other than that, I'm going to welcome you back to the Krown Crypto channel. It's a nice little Monday morning. It's a new week, some new opportunities, kind of just been more or less boring, I suppose, over the last few days, but that's okay. That's okay. Boring can be good and constructive. So let's go over here and do our chart view. And I actually want to start off things with GBDC, just very, very quick here. As we do see GBDC continue to kind of lift off and make new highs on the year, I would be looking at this one as still kind of indicative as to ETF, maybe like a front running of ETF information, just because this one perhaps, or at least most likely, if there is going to be an ETF, this one probably gets it first, just based off of what's going on in the background with its litigations and whatnot with the SEC. So with that in mind, why is that even relevant? Well, if we bring up a correlation coefficient and an adaptive regression right here, we can see that it is strongly, very, very strongly correlated with Bitcoin spot price action. So I would be looking at this as likely a leading indicator for Bitcoin. We've seen that, especially in the past couple months here. We did see that there was strength in GBDC that was not necessarily shown in Bitcoin spot price action as early as August within that consolidation. And this one obviously broke out first as well in October before Bitcoin spot did. So this one making new highs on the year, does bode well for overall Bitcoin. Doesn't necessarily mean it's going to, move higher today, but ultimately I'd be looking at that, as a greater sign. Anyways, let's get into the heart of today's analysis with Dixie. First and foremost, why do we even look at it? Well, if we look at the daily, there is actually a negative correlation between Bitcoin and Dixie here. So that does imply that, when Dixie goes up, Bitcoin goes down and vice versa as well. So this is actually a rather strong negative correlation at negative spot 60. Anything really that's more than 50 I consider rather strong. So looking at this, it does imply that that's a good sort of corollary if we're bored and, needing new things to be looking at, to kind of judge things off of. So, we've been looking at this chart for a while now, and we have been more or less bearish on it. Of course, that one of the major factors of that was actually the daily signal over here on the Oracle Pro, given a pretty good sell actually on the 23rd of October, especially when the rest of the market rally really did get going. So that one actually is still open as far as that is concerned, but you are starting to see that there are some signs of slowdown here, and what do you know? It is getting incredibly close to that 103 or so target that we were looking at, based off of the break of this sort of swing high. So with that in mind, I do look at that as well. Probably getting close to a bounce. Does that mean that the other markets are going to, do a little bit of a pullback in the short term? Yeah, probably yes. But bounce is not the same thing as reversal. This one can bounce quite significantly and still be overall, bad. I don't know about bad, but overall bearish, overall likely to continue to the downside, because right now it's on the lower high watch, of course. And so any sort of a bounce that especially fails to get back above 104.80, that's just another lower high, and that would thus confirm the reversal in this one, and likely indicate that this one will make the next push down, perhaps in early 2024, closer to 102 to 101.5 region. Of course, we can see on the daily statistics over here that Monday is a little bit more closing on the positive side. If we look at all of the closures in Dixie's history, 56 spot 25 have closed positively from open to close. If that's not redundant enough, with an average return of about spot 38%. On the gainer side, and losing about spot 32% on the losing side. So, looking at that, it doesn't really give us like a humongous, doesn't really give us like a humongously interesting formula right there. I mean, 56.25% is more or less neutral as far as I'm concerned. But we actually see that a lot, actually, on many days. It's really only when it gets above like 60% that things seem to be a little bit more solidified, let's say. But yeah, anyways, these indicators, I believe, are still on sale for the next day. Yeah, for the next day with the Oracle package, the Chart Prime package, which comes with the Oracle Pro, which comes with the range statistics over here, which comes with several other indicators, including the jewel light. And they're finally starting to work on the new indicators that I have requested, which I'm really fucking excited about because it's just more statistically based stuff. And if you get that package, the price will not change. They'll just add more and more shit that I basically give them ideas for, which is good. Anyways, yes, so let's move back into this one over here. Again, another one of our more long-term charts for Dixie on the monthly. This one is coming right around that yellow 21 exponential moving average, which is that low 103 region. Kind of, you can argue that it's basically already hit that region, but that is one of the reasons why I do believe that short term it likely does align with a bounce. So if we're looking at again these as negative corollaries to traditional markets or Bitcoin, short term, might see a little bit more of a pullback here. I shouldn't say might, but that would make it likely. And we also do see a rejection overall of the bullish controls on the monthly. So while it probably does bounce, again, the bias here would be that it does lead into a lower high, thus continuation to the downside, especially as we start to see volatility rise with this one, seemingly putting in a monthly lower high. The next sort of major area of interest on the monthly would be all the way down towards 100 even. So that would be rather significant, and that probably does lead into the next, big explosive move in other markets, assuming that does happen. Anyways, also of note here, we can see that the monthly jewel is going to potentially curl around into a full-on sell. That would still really take like another 2 months for that to really populate, like at least until January. But it's possible now. So you can start to see like the wheels turning in the background as to what that would look like. And then, down to like, 100 to 99.5 would be the next sort of area of interest to open up 2024. That might be, I think, what a lot of people would be looking at for a bull market, maybe, or if you want to call it that, I don't know. Anyways, yes. So I think, we spoke about all the things right there. I got all my drawing tools on, so we're good there. Short term, maybe one more strike to the downside, just to 103 or just below 103, then probably a bounce. But ultimately, the wheels are turning in the background. That bounce is very likely just that, a bounce before further continuation to the downside. You can see the overall macro range still does continue basically. The 200 simple even on the weekly here is starting to align with that base, climbing up towards $100 even. So somewhere around like 99.5 to $100 is probably where would be looking for this one to come down into early 2024. And I just wanted to update on this one because we've been going through it step by step, and now it's starting to really play in alignment with the rest of the analysis that we look at on other markets. So just coming at it from one more angle. Of course, it's more or less boring day, so that's the best time to be looking at shit like this. But speaking of other shit, let's talk about Bitcoin. We can go look at Bitcoin over here. There are a couple of very interesting things going on. I made a tweet about this earlier. It is the HPDRV representing volatility, aka the dispersion of returns. We're seeing it actually curl up for the first time since from these regions since basically the September rally, October rally began. Doesn't necessarily mean it's going to be that severe as what we saw over there, but we're very likely looking at an explosive move coming up maybe around the end of this week is what I'd guess. This is a daily view, so I still think it takes a little bit more time, but that would really increase the probability that we see at least a break of this 50% range here. So to the upside, that would be basically 39,600. To the downside, that would be 36,300. We can see some whiplash and sawing behavior there. But ultimately, Bitcoin still long-term, good as long as it's above, especially like $33,000. So if it does play at a pullback, I would generally be looking at that as an opportunity. Anything above 33, below 33, okay. Maybe it's the biggest bull trap of all time. And of course, to the upside, if we do see that move, and assuming that it does follow GBDC, and we do see that move, basically closer to $40,000, we could see, that next explosive sort of parabolic blow off on this current rally in the low 40s, most likely. I know some people have some targets much deeper than that. Fair enough. I'd probably take the more conservative estimate of those, but still, I do think that overall with this pre-halving rally, we're getting very mature within it. I think still best case scenario, you see something in like the mid 40s. I think something more reasonable is like low 40s, like 41, 42. 43 region. But most of this rally I do think is done. We're gonna see a greater pullback kind of emerge from that after the first quarter of 2024. And then it's going to be another waiting, I suspect. I suspect you're going to see a lot of sideways again. It's going to be really fucking boring yet again as things kind of reassess and reaccumulate. And then, around the back half of 2024, that's probably when we start to see interesting things happen. So I think that's a good place for me to be leaving off on this particular video. Hopefully that was in some way helpful. Yeah, I'll leave things off right there. Of course, the HPDR tools are in the link in the description below. If you had the original HPDR, of course, you're going to be accounted for all your costs there towards this package, even though you get 4 more indicators, 4 more of, may I dare humbly say, my favorite indicators of all time. And yeah. All right. There we go. That's enough shilling for one day. Want to be wishing the best as always. Take care, much love, and see you hopefully tomorrow.